My name is Varan Karanantham here from iConnect Mortgages with my friend Chris.
Hey, everyone.
We are going to have some discussion and it's called a mortgage minute.
Yep, we're going to work on our mortgage minute. This is going to be the second one that we've done. First one got some pretty good reception, so I think maybe we're going to try doing it a little bit more and maybe keep those minutes a little bit tighter, you know?
What do you have, Chris?
Well, a lot's been going on in the market, in the mortgage market. So I just want to go over kind of like the information that's been coming out. I see a bunch of headlines, I see it in the news, but like don't fully understand it as I'm not in the space, I'm not in the industry. So I thought maybe I could come to you and get some clarity on it.
And you want to get the message out as well?
Exactly, get the message out for everyone else as well. So one of the things that's been kind of like all over the place, I see it on the news, I see it on Reddit, I see it on social media, is this whole thing about the CMHC increasing how much people can borrow on an insured mortgage up from 1 million to 1.5. So what is that exactly? Like, how does it work? What does it mean?
It's a great thing for a lot of first-time home buyers, especially with the house prices in GTA and GTV. So right now, you cannot purchase more than $1 million prices without a 20% down. So coming December 15, you can purchase up to 1.5 with a minimum down payment. When you say minimum down payment, first 500,000 is a 5%, and the rest of them is a 10%.
Okay.
So it's roughly about $125,000 purchase, a down payment on a $1.5 million purchase. Also, we are going from a 25 amortization to a 30 amortization. So I think this is going to boost the confidence and move things around once the actual happens on December 15th.
Mm-hmm.
I'm getting a lot of inquiries, a lot of calls, and how to navigate through. So you can purchase a property, but the lenders cannot take the application until December 15th.
Oh, okay.
So a lot of calls comes, can I have a closing date on December 16th?
So someone can purchase it now and then just have the closing December 16th and then you can do it?
No, that's where the stigma is.
Okay.
The insurer will not review the deal until the December 15th. And lenders also need to gear up and do the back-end technology, because keep in mind it's a material change. So they should be able to get the deal out. And when you try to do anything in the beginning, there could be a hiccup. So we don't know what's going to happen. So my piece of advice is December 15th, in 10 days before Christmas, and a lot of people are on vacation and a holiday season. My piece of advice is have the closing in January.
Okay.
And also, you have to be mindful, you may not know you are qualified because the deal is not adjudicated until the deal goes in. So you cannot make an exception and say, you cannot make an assumption and say, it's going to close. It's approved. How about the CMHC don't approve the deal?
Yeah.
So I think we need to step back a little bit. I think we need to wait till December 15th to get the application in and allow a little bit more time. So have the closing probably early January, mid-January. I will say mid-January will be the best time to close.
So you don't think that we should be rushing it, trying to get in there as soon as possible, because it's kind of like holiday season?
I think the best way to do, Chris, will be talk to your bank, talk to your mortgage broker, and find out how much you can qualify with the new changes. With the 30 amortization, everyone knows the guidelines. Then start shopping for the property, but don't make a transaction yet.
Mm-hmm. And then, so this change, is it applying only to first-time home buyers, or is it like across the board, anyone?
This applies to anyone as long as they are purchasing the property as a principal home.
Okay.
So, for example, someone who lives in a condo, now they want to up the property size. They're going from, let's say, 10% down. They want to buy something for $1.3 million, $1.2 million, they're qualified.
Mm-hmm.
As long as a subject property they're purchasing is for as a principal home.
Okay. That's pretty cool. So you're getting a lot of people like...
A lot of inquiries, they want to put the deal in right now. They thought they can put the deal in, close on December 16th. No, it will be not adjudicated till December 15th.
Mm.
So it takes few days. So I'm like, yeah, we know the numbers will qualify. And what about CMHC say we need an appraisal? You're working with the 10% down. So my answer to the clients are, okay, if you want to make a purchase up to 1.5, worst come worst, you can come up with the 20, like let's say you don't have an approval, let's say you can come up with the 20% down, then make the purchase right now. Then when December 15th comes, we can resubmit with the less than 20% down.
Okay. And for that as well, the 1.5, you need a high income to qualify for
Not
that.
over $300,000 household income.
So there's a lot of people out there, it seems, that are able to hit that, but they don't have enough for a down payment, like 20%.
You got it, because you will be surprised the amount of newcomers, more buyers and professionals, someone who's starting as a doctor. They're making great income, but they don't have enough time to save it up.
Mm-hmm. So you think that those people are the ones that are coming, they're new to the country and they haven't been able to save up that amount?
Because they have a great income. They're coming with an income, but they don't have a 20% yet.
That's really interesting.
There's a big difference saving $300,000 versus $125,000.
Exactly. Because I was going to say, if you're making that kind of income and it's been like you haven't been able to get in the market, you must have been able to save enough to put down 20%.
Okay. Or it could be upsize buyer as well. Someone is moving from a townhouse to a detached home or condo to a townhouse. So it could be anyone.
Yeah, makes sense. We kind of like nailed down like that whole 1.5 CMHC change. What else came out recently?
There's other changes that are coming up in November 21st. If you're transferring the mortgage from lender A to lender B as a straight switch, so that it doesn't mean it's a refinance, it's just a straight switch, you don't need to go through a stress test.
Okay.
You can qualify with actual contract rate. So we know we are getting into the big renewal market over the next few years. And this is huge. It's actually give the buyers a lot of options to shop around. So for example, someone is getting let's say 4.19 on a 3-year fix. They don't need to qualify at a 6.19. They can actually qualify at a 4.19. So that's make a difference from getting a lower rate or maybe a better deal from other institution rather than just stay with the same institution. That's going to be effect on November 21st. That's also helped to someone to switch the mortgage. But keep in mind, this is just a straight switch, not a refinance, no more money. It's a straight switch.
So can you still have stress test if you're buying, let's say you're new first-time home buyer?
Absolutely. Your stress test is still there if you're buying or if you're refinancing it as well. This is like transfer from mortgage from one lender to another lender. The same amount, same dollar value, same amortization period. Everything remained the same.
I swear I heard a lot of people talking about how it was like, it's just gone. Like the stress test is gone.
Stress test is gone on the mortgage switches.
Okay, that makes more sense.
Yeah. So it makes sense because you already have the same amount of mortgage. You already qualify on the stress test. Why you're getting stress tested again?
Mm-hmm. It seems like they're doing a lot right now. Like in the last month.
Also, the election is coming too, right?
That's true. Next year election.
Yeah.
And then on top of this all, the Fed in the US just like cut their rates, mega cut with a 0.5% cut, 50 basis points. With them cutting it 50 basis points, does that actually have an effect on us, or is it kind of just like noise?
I think it does have an effect on it because we are very related to the US market as well. But on the flip side, I think our inflation has come down, but our employment has soared as well. So, and also we have to keep in mind in terms of house prices, when the rate comes down, when the rate cuts are happening, economy is also not doing that well.
Exactly, yeah.
So the job losses, that's something we need to keep in mind.
It's like a fine balance that they have to kind of like play with when it comes to interest rate. Because it seems like every time that it goes down, then that means that the economy is doing really bad. There's no jobs, stuff like that. And then when it's too high, it's just like there's way too much good stuff happening in the economy.
You got it.
Yeah. So like what is really like the healthy interest rate that they want to keep it at? Was it what we had before?
You know what? The fixed rates were between 3 to 3.5%.
Yeah.
And prime rate is about 3%, which is just before COVID. That was a no.
Mm-hmm.
COVID like spoiled everyone.
Yeah. All the free money that came out of it.
Pretty much.
Yeah.
And also there's another change happened. You can refinance up to 90% as long as you're using the funds for building a secondary unit. Could be a garden suite, or it could be basement apartment, like legal basement apartment, or a laneway homes. I don't know much details about it, like how the proceeds going to work out. How do you justify the refinance? So we don't have that much of a detail. That's also coming up in January as well.
Interesting. So you can take out a loan on your house, a secondary loan,
up to 90% of the property.
Up to 90% to put in something else. And do you know like if you can do it as like an investment piece? Like
no, I think it's because CMHC only works with the principal homes.
Okay.
owner-occupied homes. So this probably goes to putting a suite on your owner-occupied homes.
Interesting. And then another thing that I was wondering too when I was reading all about this is CMHC doing an insured mortgage. What does that even mean? Like, is CMHC like the person providing the mortgage now, or?
Great question. They actually insure the mortgage for the lender in case if the borrower goes on default.
Okay, and CMHC is a
It's
government?
it's a crown company. But keep in mind, there are two insurers. One is three insurers: CMHC, Canada Guarantee, and Sagen. Sagen and Canada Guarantee are private entity. CMHC is only crown corporation.
Interesting. So like if it's a crown corporation, who's funding that?
Government is funding it.
So taxpayer.
But they also do the risk mitigation from the premiums.
Yeah.
So the premiums are not cheap. It starts about 3.1 to 4% of the loan amount.
Okay.
And you don't pay it out of the pocket. So a lot of people don't understand how much the premiums are. So that's why they call it insurance. It's like buying insurance. So they protect the lender.
Yeah. That's interesting how it works because like people always hear CMHC and stuff like and insurance, but they don't understand like what's behind it. What is it?
But CMHC has a lot of other things. They do affordable housing. They do many other things as well. This is one of the entities for CMHC. And keep in mind, like the premiums are higher. The premiums are included on the mortgage as well. And that's a way to kind of control it.
Mm-hmm.
So that's where the lenders are protected.
Yeah. It makes sense. At the same time, they're protecting the lenders, but it's also to help out people being able to afford more.
And also, that's the reason the mortgage rates are lower when your mortgage is insured versus uninsured conventional, because the lenders are is a backend secured by CMHC. So the cost of borrowing for those mortgages are much cheaper compared to uninsured mortgage, because these are backend securitized by CMHC. So everyone asks me, why am I paying a higher rate for putting more down? So it's backend. This is how the background works.
Yeah. Yeah. It's not anything that people see, like how it actually works up front.
Correct.
Yeah.
Correct. It's hard to explain. I'm putting 20% down. I get a higher rate than someone's putting 5%.
Exactly. Yeah. That's a question that everyone would have. Yeah.
This is the mechanism in the back end with the back end securitized.
Mm-hmm. So with that, like with CMHC doing all these new things that they're making changes for, do you think it's actually going to make a difference for people, like affordability?
I think it will make things move, right? So someone who is stuck with a townhouse because they don't have a 20% to purchase a home they want to purchase, now they want to move it. Now they are going to move, sell, and they're going to get into something they can qualify.
Mm.
Right? So I think it will make impact in the market.
Yeah. Okay. Very interesting.
And it's become more reachable for them.
Yeah. Yeah, for sure. Even like ever since it happened, like a lot of people that I've talked to that never are into real estate or whatever, they brought up new changes and they were like, now I feel like I can afford something. So it seems like it's actually doing something.
But also it's a little bit scary as well. If you look at the premium and the down payment on a $1.5 million property, it's a 98% loan to value.
Yeah.
So let's say someone loses a job or something goes wrong. If they had to sell the property, the realtor commission and all the fees are almost 6%.
Yeah.
It has to be a well-qualified borrower to get in.
Yeah. So what you're saying is loan to value is you have to put up 10, if it's 90%.
No, it's like a first 500,000 is 5%.
Okay.
And the rest of the million is 10%. That's 125,000 down. Plus the CMHC premium. That's almost 98% of the property value if you're buying for $1.5 million.
Mm-hmm.
So market has appraised. If you're going through some life-changing event, if you had to sell the property, you may not have enough money to pay those debts off. If you had to factor the penalty to break the mortgage, you need to factor the real estate commission, HST in the real estate commission, and all those moving costs, all the legal fees. So it has to make sense.
Yeah. And what happens if you can't?
The buyer's in default. It's pretty scary if you look at that.
Yeah, for sure. For sure. Because you have so much over top of you that you're not even playing with.
And also keep in mind, it's also the same in terms of the $1 million purchase price as well. Someone putting a minimum down payment, but now we are extending it to $500,000.
Yeah. Yeah.
So that's a big amount.
Yeah, big difference.
And buyers for a townhouse or a condo under $1 million is much affordable than finding someone at a 1.5.
Yeah, for sure. Wow. So there's been a lot that has happened in the past month,
we
pretty
haven't
much.
shot for a while.
Yeah. So I'm sure next month you're going to have another one. Maybe not as much changes as this.
We'll see.
As we go
They're
in.
surprising us. So
Yeah, it's surprising us for sure. I remember we got hit with that jackpot, the industry jackpot they called it, which was exactly what we just talked about. And yeah, I guess there's more to come.
thank you for watching us. And if you have any questions or you want to chat about anything related to the financing, no obligation, give us a call at 905-999-7193.
Sounds good.
Thank you.
See you
for
guys.
listening.